someone with low capital, not enough capital, okay, I suggest you go for cash. And then what happens is you go for cash, and then you cannot short the markets if you want to hold your positions overnight. So you're not trading intraday. Let's say you feel right now here that the markets are likely to turn down and will go down for 4 or 5 days, and you are pretty confident of that, but if you're just trading in cash, you can't do it. So that person asked me what I should do. So I said, I mean, obviously you'll need some capital. Like if you're trading with 5k, I cannot help you. No one can help you. But let's say even if you're trading with 50k or 100k, and I'm still not suggesting you to get into FNO, you can do something very, very interesting. And that is you can buy puts. Everyone knows that, all right? Half of the world is doing that. More than half. Okay, 90% of people are doing that. What is so crazy about this? Well, you can buy puts and you can hedge them with long stock. Let us work through an example. Okay, Reliance is 250. What is Reliance trading at? Okay, Reliance is trading at 2321. All right, and 250. So now let us work some things. What you do is you believe that Reliance is say 2321, okay, and it is likely to go to 2100 over the next 2-3 days. Now what you can do is you can buy a 2300 put that will be at the money put, and you are now short 250 shares, but you're not short 250 shares. What you are short is 125. Why? Because of the delta. You want to short 125 shares of Reliance, that will cost you 2,32,000. So again, it's a big deal. Make sense? What you can do? Okay, go one strike lower. Don't go at the money. Go for, let's say, 0.4 delta. Now, how much are you short? 100 shares. So you are short 100 shares. You have bought a put. It's not how much. It won't cost you too much. And then let's say you have 100k. Now you decide how many shares you want to short. Originally, let's say if you have 100k and you are trading a 2000 rupee stock, right? So max you can buy is 50. So if you are buying 25. So what I'm suggesting is, let's say you have 100 with 0.4 delta and 250 lot size, you are short 100 shares. You select appropriate delta that gives you a number. Let's say you select a 0.2 delta option, which is out of the money, and that way you are short 50 stocks and you can buy 25, and 50 minus 25, you will be net short 25 stocks. So what is happening here is that you are hedging. You have bought 50 stocks in the form of puts, you have paid some premium for it, and then you have bought 25 long stock. Net short position is 25, which you can easily hold on for 2 to 3 days. You can hold on for more also, but 2 to 3 days you can hold on for. And now if the stock tanks, okay, it really goes down to 2100, this 50 shares will increase in value. All right, these 25 shares will decrease in value, and you will have theta decay. Don't forget that. But now you are dealing with stocks, so you are dealing with monthly expiry. Now, if you are dealing with monthly expiry and you are in the first 3 weeks, the theta decay is there, but it's not very alarming. And if your trade is there just for 2-3 days, it won't affect you much if the market really moves. So the only issue with this particular trade is if the market does not move, then you will lose money in terms of theta decay. If it goes slightly against you, some money will be recovered on this, some money will be lost on this, and there will be a theta decay problem for you. But again, like, the loss will not be same as shorting 50 shares. So my point here is that, like, you select a appropriate delta. So let's say you select a 0.2 delta, then your net short position will be 50 shares, and you buy 25 against that. So your net short will be 25 shares, which is usually what you trade from the long side, and then you manage this position. Don't try to do too many things. Don't try to get too smart with the markets. Keep it simple. Keep your trades short term. Wait for the best time when the market actually starts moving, and then jump into these trades, and you will be able to trade from the short side. So the trade here is buy a put and buy shares, and then you use delta here and the number of shares here to get your net short position. So if you're buying at the money, the delta is 0.5, so you will be short 125 shares, and you hedge it with, say, you can buy 100 shares of Reliance, then you will be net short 25. and the delta also works in your favor. So what happens, I'll tell you. Stock, let's say you have selected a 0.2 delta option, so that gives you 50 net short and you buy 25 shares, so that is your net short position is 25 shares. All right, I hope this makes sense because the delta for this is 1. Now what happens, let's say market goes against you. What do you think is going to happen with this delta? It is going to go down. So I'm not talking about holding this trade for 2 weeks. You're just trading it for 2-3 days. But let's say as soon as you buy this, it goes against you. The 0.2 will drop down to 0.15. It will drop down to 0.1. But this is going to stay 1 only. So as soon as, let's say this drops down to 0.1 and the original lot size is 250, now your net short position is 25 only. So even if the market goes drastically against you, the amount you are going to lose on this option is not going to be much compared to the profit you make from this option. So even if you are proven completely wrong and actually market races against you, that can actually give you a break even or a profitable trade. And if it goes in your favor, this is going to be 1, but this will keep increasing. So let's say market falls as you expect, the 0.2 delta moves to 0.4 delta. Now when the market is moving in your direction, you are not short 50 shares, you are short 100 shares. How? Because the delta has increased. The delta is now 0.4. Now you're short 100 shares and it tanks another 100 points in your favor. You're making money on 100 shares and you're losing money on 25 shares. So this kind of works out, right? You have to do some permutation combinations to come up with the best way to implement this strategy, but this can work.